Welcome to the midweek market update at Wealthy Bucket. The midweek update is produced to gauge and analyze how the markets have performed based on our Bucket Weekly market forecast. Wealthy Bucket does not provide investment advice. Before engaging the markets, please consult a financial professional to see if it is right for you. Trading and investing in stocks, options, currency, and futures carry risks that can result in a financial loss. So we're going to put together a quick video today, and the main focus is a continuation of our theme on Sunday, whereby we had a positively correlating market with the S&P 500, between the S&P 500 and the yen, and we said it may be best right now to hold off on entering new trades. You can hold on to your current positions if you are long the market. However, it's not a good idea, or it's suggested to not add, simply because historically when the yen moves up, the markets should move down, and it didn't happen. You can look at last week here. The yen moved up and the markets moved up. So we were a little iffy in terms of adding on positions, simply because we didn't know. We wanted to wait, so to speak, for the market to converge, so to speak, back into a historical correlation, and it did so this week, starting with the first few days here. You got a little bit of an up market on Monday, Tuesday, Wednesday, and we're going into Thursday right now. As you can see, the yen has rolled over and the S&P 500 has normalized. Now, it's not safe to say, well, okay, the water's warm and everyone jump in right now. You want to see how this yen is going to pivot, and then you want to see how the S&P performs once the yen pivots. However, the relationship has moved back. As far as the first 4 days are concerned, the markets have moved back into proper historical correlation. So that is a good sign, because when you have good correlation models and they were strong and they are consistent, then you can easily time the markets, and your probability is high, your risk is low. So let's take a look at the S&P 500 now. And the S&P 500 yesterday and today has traded into our next target. We had our previous target at 1961. Now it's at 1973, and it's traded in. So that means the next target for the S&P, as far as we're concerned, is 1987. Now that doesn't mean it's going to go in a straight line. Simply that is the next target we are aiming for, our expectations of where the S&P 500 moves. Some of you may be watching and saying, well, okay, your targets are so close to each other. Well, there's nothing wrong with that. Where this allows us to identify where the market can turn, so that we can wait for it to turn and then buy more on a lower pivot. It's all about timing. If we say, well, the market's going up, you don't know how far it's going to go unless you have little targets along the way. It's about setting little goals, so to speak. If you have a big goal and don't know how to get there, or can't understand how the market's going to get there, and it's never going to get there in a straight line, your timing is going to be off. You're probably going to lose money, and you're going to be frustrated. So what we do here is we manage the markets little by little, so that investors can learn and understand what affects the market. And what affects it is simply we look at the entire market, and that is what our Bucket Weekly market forecast is based off of. So the S&P has hit our next target. Our Dow, we got shaken out of our Dow trade last week, and it's moving back up towards our target. So that kind of sucks, but that is trading, so to speak. Let's move ahead to a few of our trades that we had identified on Sunday for our members, starting with the US dollar idea. And we expected the US dollar, or we anticipated US dollar to come down into this level, which it did, and now it's starting to move back out. So if we get a good close out of here on a short-term basis, then we have a good trade set up here for the US dollar going long. Our crude idea, we had two of them set up. First one was getting in at 105.06, and obviously the crude might crash through, so we had a second idea ready to go. And it looks, we're going to have to wait for crude to come back into 103 around 11, and then check out crude at that time. Our long technology stock is doing, sector ETF is doing okay. It's moving up as expected, and we are probably going to have to take a loss on this short industrial ETF if the market keeps moving against us, so to speak. And that was designed to hedge out some risk if the market started to roll over. So all in all, the markets are starting to normalize, so to speak, based on the correlation models. The takeaway now is watch where yen pivots, how it pivots, and how does the S&P 500 pivot. And how does the S&P 500 pivot? Is it negative or positively correlated to the Japanese yen? As always, you can always send us emails at service@wealthybucket.com. We'd be glad to answer your questions. We hope you've been having a great week, and we thank you for stopping by.